Hi, I'm Mikey. This is Tyler, and we're the founders of Innovative Start organization. Innovative Start, also known as ISO, teaches financial literacy with the goal of informing, not persuading. We have a couple topics today, obviously, as we do every week with these recordings. Today, we're going to talk about some big news that came out about McGraw-Hill. If you're a student, whether high school or collegiate level, you've probably heard about that textbook. I mean, the only other big one I think is Pearson, probably. And then we'll probably go into some topics about short-term and long-term goal setting. And that can be either from your first paycheck or even to your first paycheck as a post-grad or, full-time adult. But yeah, so the news came out, I think this past, probably earlier in the week, actually, that McGraw-Hill was looking to IPO. Uh, if you don't know what an IPO is, essentially it is a public offering. It's like the initial public offering for anybody to come in and invest. So usually companies that are private or have private equity, meaning that, you as a public person cannot invest within that company, yada yada, right? It's more so firms and things like that they raise money from. It's usually how they get their funding. Usually, when a company goes into an IPO type of setting, they're looking to raise more money for either some type of big project, some push in some type of direction where they need to get more funding in order to pay for those potential costs or expenses that come up. Um, I would say like there hasn't really been anything I feel like as big but not noticeable as McGraw-Hill going into that setting. Because I mean, companies IPO on a weekly basis probably, and you hear about it here and there. What I really want to hit on is what it means to you as a consumer, potential student, and those textbooks cost. So, if you are a student, especially at the college level, I mean, public school, those books are probably, used for a few years and the school gets their funding for that. But when you get to college, that's when that cost comes and, it kicks you. So, textbooks are expensive. Will probably be the majority that you pay. Most of the time, scholarships or loans don't cover textbook costs. And then a lot of the times too with those textbooks, they can be, physical or virtual. So I think a lot of the times, especially when I was in college, most of my textbooks were virtual. Rarely did I have a physical textbook. And then, like I said, with those costs, you have the sense of, that physical textbook costing a lot more than the virtual one, and the virtual one being limited in time usage. Anything you want to add on to IPO or basically this McGraw Hill before we dive into it?
Uh, no, I'm good to dive into it.
All right. So essentially, McGraw Hill, the people known or the company known for their textbook, I guess manufacturing. But a lot of times, what we look at is, what are the costs that comes into that. So from a overall perspective or like an investor, you're like, yeah, McGraw-Hill, maybe they'll have some type of, you know, great IPO. I don't know what they're looking to start off as their price offering, but um, in any sense or in any general sense, right, just raising that money to do whatever big project they have next. So um, some things that you're looking at is digital learning tools, so they could be expanding on that. Maybe they're looking to add some AI aspects to that because I think that's just what's trending right now. And then some digital subscriptions. Now, one of the biggest things that we're looking at as far as like, okay, what do you mean and what does it all mean and why should you care as a student? What happens is that when a company no longer has some type of private interest, obviously we live right in a capitalistic structure. So you're always wanting to raise more money, raise that bottom line, etc. So, right, you move past the private equity part, now you need more money, and this is when you IPO. Essentially, that is bad for you as a consumer because now the interest of, hey, say maybe their private equity was mostly educational investors. Now it can just be anybody, right? anybody in the sense of they need to raise money. So no longer are they going to care, right? And this is in the general sense. Maybe they might not raise the price of textbooks, but this is what something that you can look out for, right? Um, in the sense of, okay, hey, we need more profit. We need more profit, right? How do you gain more profit? You just can't pull that out of thin air. You got to charge that back to the consumer. So whatever project that they need to build out, that they need to raise this money for, obviously they're looking to use that to create a better profit for themselves. I'm trying to think if there's any company recently outside of McGraw-Hill that has done so. Um, I would say a lot of the big companies that you know of have already been there, and so you don't really feel the impact of it. But um, any company that you can find a ticker for that's looking, like I said, to build out their profit line, stay in the green. Essentially, what you're going to look at is that price coming back to the consumer. How can we add another service? How can we add something different to make sure that we're creating a long-lasting aspect for our investors? Tyler, do you want to add on anything to that?
I was going to say a ticker is as like a it's like a four letter. I think it's four letters that describe a stock,
Mm-hmm.
um, a specific stock name or company. Just for those that may not know. No, I mean, I guess two sides of this. One, an IPO is good because it'll raise money for companies and maybe they can provide better products.
Mm-hmm.
Two, I guess that's one side of it. Another side, playing devil's advocate, people that may not like IPOs is they think that companies will have to answer more to shareholders, and shareholders tend to care more about finances than they do other things, maybe like company culture or um, the end product, maybe. It's really, for the most part, stock shareholders care more about the finances. So everything becomes financial. Some people like that, some people don't. So there's definitely pros and cons. That's very interesting. Um, IPOs or initial public offerings are very interesting as well. Essentially, you know, there's private and public. Majority companies are private or public, and so private companies like HVAC businesses or other things that may not be on the stock market, and public companies are obviously on the stock market. You can trade them, things like
Mm-hmm.
that. It is interesting though because some people think this is great. It provides retail investors, like I guess the everyday people, to invest in businesses and own part of a large company, but also large investment banks, things like that, they get a piece of the action and a piece of businesses before they go public on the stock market at share prices that are better than the retail share price. So there's a lot there's a lot of different angles and different sides to these. So we will, again, we're not here to persuade. You take the information for what it is and go from there. But yeah, I do think it's interesting. I will say that the education model, I'm wondering if McGraw-Hill needs to, and Mikey, you may know more about this than I do, if they need to raise more money. That's why they're doing an IPO,
Mm-hmm.
to try to get more investors in because maybe they're struggling with the current education market. I don't
Mm-hmm.
know. I feel like probably the education market's being hit a lot right now because there's so much information on the internet.
Mm-hmm.
Why do we need to go to books? Like back in the day, like way back in the day, books, like there was no internet. You had to read a book to know the information. Like, and that's why the printing press was such a, what was that, like one of the greatest world inventions because
Mm-hmm.
it decentralized information from those, the few uh, kings or whoever that could read and actually gave books to the common man way back in the day. So I don't know. Think about it, right? Like, I don't know. It's interesting. McGraw-Hill, whenever we were in college, a few years ago, there was a lot of stuff online, and I used a lot of online textbooks,
Yep.
so it could change more quickly. But also, a physical book takes time. I don't know. There's just a bunch of interesting things. I'm going to be curious to see how they actually do. I'm just not sure the business model, though. Like, not
Yeah,
that we need to get into.
I was
I'm
gonna
just really.
say to agree with you. I don't the biz. And to go to what you're saying too, like from, a more physical, because even in our like, I guess lifetime from elementary school, right? You had to have your two online resources and your two book resources and whatnot. You go to the computer lab or the computer lab comes to you essentially. But I think with access to technology, you start to weed out some of the kind of privileged information or ones that were like more cost effective because now you can go online and find similar information or learn in a similar way, right? Because the textbook is words, has a way of teaching you the model or whatever you're learning, whereas math or whatever it is, right? And say you go on Chegg, which I don't know how proficient Chegg is now with like AI and ChatGPT and all that stuff, where you can just probably plug stuff in. But these are disruptors that you look at. Now, maybe they have a bigger thing planned, and that's why they need that additional funding because they're looking to compete in that market of disruptors, right? As a CEO of a company, right, especially whenever McGraw-Hill was established, I don't know the exact date for that, but when you look at it from where we used to be as a society to getting, our information from a newspaper or whatever, right? You didn't just have it to you, right? You couldn't just go online, get that information straight to you. It wasn't that way. Now, all you have to do is open up your phone. Most people have access to a cellular device more now than ever. Um, we went from phones and smartphones being very expensive to you can get a really cheap smartphone and do the exact same thing. The gap on privileged items is closing every single time. There's a huge market disruptor every single time. So whenever you're a company and you think you have this fail safe, print and press, things like that, things that you are the disruptor, right? Now you get down the line years later, you rarely see anybody with a newspaper. Now you're going to get into a thing where you rarely see anybody with a physical textbook, right? Then you're going to get to a point where people probably won't even use a textbook. If that information is just freely online, right, or a trained AI model can tell me the same information in a better way, you might even push into the education space of there are, and I would say like we can look at it. This would be the homework, and these are like these are never facts. Obviously, what me and Tyler talk about is just some of the things that we just have, whether from an opinion standpoint or just some of the things that we've seen within financial news. But from a teaching aspect too, you have the ability to say, hey, maybe we don't need one or two teachers in this category of education because we can probably push that on to some self-learning with AI. These are things that you look at as far as disruptors as learning things, and maybe that could be something that McGraw-Hill needs to raise money for because they want to disrupt that way. You know, if I can't
Yeah.
if I can't push that way, might as well push the other way. Um, again, I'm not in cahoots with McGraw-Hill. I don't know what their big plan is as far as like what they're trying to do. I'm sure that'll come out as far as what they're looking to get into.
It
So,
looks like just a few things. This is just off Wikipedia. McGraw-Hill Education was divested and acquired by Apollo Global Management 2013 for 2.4 billion in cash, and then they were sold again in 2021 to Platinum Equity for 4.5 billion dollars. So Apollo, um, almost, well, yeah, well, almost doubled their acquisition in what, 8 years. It'll be interesting to see what happens. But they were founded in 1888, which is crazy, the
mm,
company.
that's what I said. They've been
Um,
around for a minute.
yeah, so anyway, that's that for that topic.
Yeah, yeah. And also it looks like they're trying to raise up to 1 billion. So we'll see with that. I'm trying to figure out what they need that much money for. But again, they're an education-based company, so obviously they'll probably try to stick to their mission for that. But at the same time, capitalism exists. You still have to make that type of money. So, our homework for our viewers is, pay attention to it. If you see anything as a student and, from your freshman year of high school up until, if you go to college or whatever that looks like, and you're like, hey, I remember this conversation or whatnot. If your textbooks change, whether that's like from a pricing standpoint or from just how they're delivering it to the consumer, that is going to be where we look at as far as like, okay, so what are we getting out of, what are they getting out of this IPO? What are they trying to raise funds for? Are they trying to, disrupt the market and, that's going to come at a hefty cost? Or are they just looking to, find another way to um, make a profit? But yeah, anything else on the IPO stuff before we jump into our next topic?
If this interests you, look into like IPOs or SPACs,
Hmm.
um, and yeah, initial like ICOs, initial coin offerings. Those were kind of like a hot topic in the crypto space. But anyway, yeah, that's all for me.
Yeah, hopefully, maybe we should talk more about that on like crypto stuff in our next video. I'll be glad to hop into that. But yeah, moving into our next topic, one of the biggest things too, I think, is some goal setting. We've had a few conversations with individuals as far as like short-term slash long-term goal setting post graduation. Not so much with people who first started earning, that first paycheck within their job as a 15, 16-year-old. I'll never forget kind of side story, but I was in eighth grade and they came in Six Flags and it's like, oh, like you can be 14. You just have to get, parents' permission to come and work at Six Flags. I remember people like, yeah, I'm ready to make some money. Like it wasn't in at the time. I don't even know what minimum wage was, but it was nothing. But at the time as a kid, right? Because I think being eighth grade, I mean 13, 14 years old. Like, yeah, like let me go home and tell my parents, hey, I'm trying to get a job, already. So, within my first job though, I started when I was around 16, like a couple months after. It was around my sophomore year. I was pushing carts for Schnucks, which is like a small grocery chain based out of like the Midwest. So, um, push carts bagged. That's what I did for, I forgot, 765 or something like that. I also had union dues too, which is so new to me. I think it was so crazy because I was like, gosh, you're taking like a good chunk of my check. I was like, I don't care what this union is, I don't need it. But I was like, I need my money. We got paid weekly. I remember that. That was the best. But I was making like $80 a week, which is not a lot. But for like a high school student with no bills and nothing like that, I'm like, I'm cashed out. I didn't even have a bank account at that time. I was putting all my checks into my wallet. I didn't necessarily buy anything expensive. My most expensive purchase was an iPad. Um, and that thing lasted all the way until my junior year in college. And then I even traded it in and got money off for it for the newest iPad that I have. But those things have like lasted a minute. So, a great long-term purchase as far as like something I saved up for. But I had like $600 saved. I had worked for like for a month or so. Finally opened up a bank account, put some money in there. I think one of the biggest things when you open up a bank account is credit unions are really friendly, especially for like new time or new people getting into like the banking side of it. So if you're ever getting started, hey, I need to open up a savings account or a checking account, look at those credit unions. The structure model of a commercial bank versus a credit union is completely different. So do your research on that, but I highly recommend it as a starter. Obviously, probably when you get older, you probably want access to more commercial banks as far as like they have ATMs everywhere and they're just basically everywhere more accessible. But at the same time, you do still get those benefits and building up, a relationship with your credit union can also help you in the long term. And this is also going back into the goal setting. If you want to get a home loan, a car loan, or anything like that, building those relationships with your credit union will help a lot as far as like even just building your own credit history. They can offer a lot of opportunities to you that you might not get out of commercial banking. So, but shout out to my credit union that I also don't even use anymore, which is crazy. But yeah, I think that's good. And then high yield savings account. Obviously, we had videos of that, but most definitely get into that. I wish somebody told me about that. I probably would have been buku money. But yeah, I think anything as far as like when I first was getting my paychecks, I had the savings down, but I didn't have any goals as far as like what I want to do. Obviously, as a 16-year-old, like get a car was probably like the main goal that I had. Um, I really saved and saved and saved. I bought me a little rust bucket. If you know what a lemon is, I don't think people even use that term anymore, but it was most definitely a lemon. Um, but it got me to A to B, which was school and work and home. So I guess C too. But yeah, I think one of the biggest things as far as like saving for the car is you miss out on some opportunities as far as you know, probably eating out a bunch. I think when you're in high school, you probably don't think that you eat out as much, but when you have friends that want to do stuff and things like that, like it starts to add up, especially when you're not making that much. $80 again is a lot of was a lot of money then, but again, I had no other expenses. $80 could be a dollar now for me at this point in my life. But yeah, I think those are like some things I noticed in high school is just not having any goal setting. Like I didn't think, oh, I'm gonna, save for college or oh, put the money aside for that. The only thing I can think of was, yeah, I got my money saved. I was extremely frugal at the time. A lot of my family members called me cheap. I was not cheap. I was just frugal. I just knew where to spend my money, and I wasn't just gonna spend it on willy-nilly. So I did buy some shoes here and there, but it was always like on the cheaper side, clearance store. Like, oh, I was like, oh, these shoes look nice. Let me just grab these real quick for 40, $50. But yeah, what about you, Tyler? How was your high school goal setting?
Non-existent. All I cared about was my clothes and gas and eating out. Eating out was so much. Like I'd probably spend $30 to $50 eating out on a week in a weekend easily if
Hmm.
and I didn't get an allowance. So it was what I worked at a skating rink, but I was a party host, so it was good because I got tips. So I would
Hmm.
walk away. I could do $100, $200 in one weekend, which is great. I mean, that's man. There's some times where I would work a 12-hour shift and I wouldn't even eat, like because we were just so busy. And that was my decision. It wasn't a, I mean, but it was exhausting. Put the work in for sure, but the problem was is like I was paying for my clothes, I was paying for my gas and things like that. Um, Granted, thankfully, some of those, I was buying good quality stuff, so I'm still wearing it and I haven't really changed size wise, which is good. Um, but no, there was no goals. So if that was in the beginning of high school. Later on, like senior year, then I started to get serious. Like I really started getting, I was just watching all these YouTube videos and starting to get interested in investing, and so finally invested myself my first time freshman year of college. But yeah, no goals, not existent at all. Uh, and so yeah, I wish someone told me, eat at home, get a little appetizer or something when you're out with your friends and then start saving as much as possible. But hey, I mean, I'm doing it now, but
Yeah.
not back then.
Yeah, no, I feel that too because I remember I'll be like, I'm like, oh, y'all wanna go to B Dubs, and I'm like, are they doing, buy one get one? That's why I'm not going. But yeah, I had to face all the frugal allegations for many years. They're like, never wanna. But I'm like, because I'm like, if you was working for this money, yeah, you would be the same.
Oh yeah.
So yeah, it puts a difference on it because like you can now see like your parents when you ask them for like expensive items and then you think like okay like this item am I asking for depending on how much your parents are getting paid hourly salary or whatever that is, right? That's a huge part of the time that they put in physical effort of working, and that's like a huge ask that you're asking for. And now granted or not, your parents are able to do that. um it's nice, but at the same time, when you start working and then you're like, dang, I was asking for these, $150 pair of shoes. Now that I didn't, slaved over, 8 hour, 12-hour shift on a busy weekend, in my high school job or whatever, you're like, okay, I only made $150 this week. So is that worth, the 20 hours or so I just put in? College was a little bit different, and then post graduating was different too. It's it's different because you're not making the small amounts of money you were in college. Everybody's broke, no matter where you are in life or how privileged you are. Like everybody's on a I think a better kind of leveled field as far as like financially. It just gives a huge like I guess light onto what does it look like to be this a broke young adult, essentially. So all your bills are getting by. Going out, drinks were a lot cheaper. Drinks in a college town versus, outside of a college town, dramatically different. And even though those college drinks are disgusting, they're getting me way more than those, 20, $30 drinks. So those are some things that I like noticed within my college level, but I just never had any money as a college student to even think about saving, think about everything was penny pinched. Um, I did a lot of budgeting in my head, as I think I talked about that last video. It's just having to figure out like, okay, what do we need to do to make sure that we squeeze by for this month, the next month. One of the goals that I had was building up my credit, which I did. Um, and then another was learning more about investing. Like it doesn't always have to be about making money. I would say that. Like it can just be from a mental, standpoint. It doesn't always have to be financial standpoint. Physical. I wanted to get into the gym. I was wanting like certain, weight progress as far as like what did I want to do, build muscle. Um, I lost all interest as far as like buying clothes, buying shoes, and all that because I just couldn't afford any of those things. Focused on meal prepping, so that was a short-term goal. I did that a lot, but yeah, some of those goals that I had helped out a lot. Building my credit was one of my, like I said, long-term things. It helped me a lot because by the time I graduated, getting renting for an apartment and having a good credit history and everything else, was the difference of paying a $600 to $900 deposit, security deposit versus, hey, we'll just, give it to you without needing all of that information. Or sometimes you have to pay a fee. So, like I said, those are one of the things where I'm like, okay, let me get into that. Post graduating college, I just wanted to save up, invest into some retirement accounts. I did that. I had goals to get like my retirement account up to a certain amount. I was looking at traveling wise. I did some of the things that I wanted to do, but yeah, those are some of the things. Like I said, I looked at. I was like, okay, like these are some goals that I feel like I hit. Again, there's things I missed, but giving circumstances and which goals kind of impede on others, it's extremely important to look at, what is something that, oh, I can move this around versus like this is very concrete. And that's really the difference between a short-term or a long-term goal there. So if it's extremely concrete and it could be life-changing, again, financially, physically, mentally, whatever it is, go ahead and add that in there, stick to it. All it takes is, there's a lot of philosophies around it, but like just day by day, do it once, get into the habit, build a really, really, really good habit out of it, and it'll be part of your everyday routine. Anything you got for that, Tyler, as far as like college and post graduating?
I like the habit piece you just spoke about. Like, um, my opinion is like discipline and like little things add up over time. So if you're like, man, I'm so hungry, like or this is just for me, man, I'm so hungry, I don't want to make food right now. I'm just gonna go buy food. Every time you get that hungry, lazy feeling, you're gonna go spend money, spend money. Over time, that could be $9 or $10 twice, 3 times a week. And then what's that? That's $30 a week. Then that's $120 a month. And then that's what, like it adds up, it compounds.
Mhm.
So meal prepping is huge when you have energy, on a Sunday night, go ahead and block Sunday. I don't know, like it's just for me, block Sunday out to reset for the week, whatever you got to do. Maybe that's Monday night. I don't know. Those little things add up. And yeah, like just speaking about this before we start this recording, like figure out what's the end goal, like what do you want to do over the next 5 years? Maybe some people don't care about the house they live in. They just live in a shack for, whatever, $1,000 a month, whatever it may be. They may drive into work from outside the city and then use all their extra income to go travel or whatever. Like again, people value different things, whether that's clothes or cars or whatever that may be, I would just say have some what is it, intrinsic thoughts, or like, look at yourself and figure out what you value and then put your money towards that. Um, it's a healthy balance, right? We only live once, so enjoy life, but also, you want to plan for the future. And that, we say this a lot, but that's an individualistic thing, and it's hard, and it'll change over time, and that's fine too. That's the beauty of life.
Yep.
My personal philosophical.
Okay. But yeah, to go off of what Tyler said, I think it's easier as a guy to meal prep. One of the things that I noticed is that like I didn't need a bunch of fancy stuff in my food. I just had my protein and some grains, and I called it a day. I think now I see like some of the fitness influencers, and they'll have all these like fancy dishes, and they're like, it's minimal, and I'm like, ain't nothing minimal about that, dish that you got there. I'll show you minimal. I'll show you minimal as far as like what I was eating in college. I literally had chicken and rice, beef and rice. Like, yeah, you got all this extra going on, avocado and everything else in there, and you're making these parfaits and all that. I'm like, I didn't. That's already asking a lot out of me. But um, yeah, I say like just to stick to your goals. But to kind of wrap up on everything, I think again, as all of our videos go, always do your research on some of the things that we talk about. Formulate your own opinion on those matters too as well, and let us know in the comments what you think. Again, we talked about some of the stuff with IPOs, McGraw-Hill's IPOing, and then we also talked about some of the short-term, long-term goal setting. Obviously, everything like life changes, things happen. Again, it's like Tyler was saying, no, some goals can be materialistic, other ones can be experience based. Just depends on how your viewpoint of how you want to live life. So look at it that way. Build out whatever you need to do, and then whatever you need to do to accomplish that is, that that's where you start marking off and building out that consistency to get to that end goal. By all means, like just because as long as you don't take multiple days off, you're good. Sometimes you might need a break, but again, stay consistent, and that's what matters. But yeah, anything else from you, Tyler, before we wrap up? All right.
Nope.
Again, we appreciate it. Thank you for watching. Uh, like, comment, and subscribe for more ISO. And yeah, we'll see you guys later.